What's up, guys? Welcome to the YouTube channel. Some of you may know me from Instagram as AD Capital. Today we're just going to be running through my swing trading strategy that makes me 5 to 6% per month on my funded accounts. I'm going to break down the basics of this strategy. We're then going to go into a little backtesting session so you can see the strategy playing out in real time. Now, if you guys are actually serious about trading and you're not just watching YouTube videos to procrastinate, what I want you to do is to take some notes on this video and just leave them in the comments, right? So make a little summary of how the strategy works. Leave it in the comments, and you're not only going to be helping yourself, but you're going to be helping other people who go down there and read the comments, okay? All right, guys, let's get a little bit more into the details of this strategy, okay? So, like I already mentioned, we are going to be using primarily the daily time frame to find our trades, okay? The first thing we're going to do is identify areas of interest, support and resistance, liquidity, and strong trend lines, okay? We are then going to wait for a bull hammer for buys at support or at a trend or at a break and retest, and we're going to do the opposite for a shooting star, okay? And you might be thinking support and resistance and shooting star, candlestick patterns, this is too basic. I've tried ICT. I've been profitable with ICT strategies. Let me tell you that other things work so long as you backtest, right? I cannot stress this enough. I get hundreds of messages every day of people asking me like, what's the best strategy? What's the best strategy? The best strategy is to backtest, right? It's that simple. You just backtest and then you refine, right? People just don't understand that. But just to break down, what is a bull hammer and what does it actually mean? Well, it is a bullish sign, right? Now, on the 1 minute, stuff like this is not very relevant, okay? 1 minute candlesticks they don't mean much, right? But on the daily, that's different. A daily candle could determine the direction for the next day, all right? So a bull hammer has three parts, right? It has the wick at the bottom, it has the body, and it may have either a small wick or it can have ideally no wick at the top. And what does this actually mean? Well, this means price tried to go to the downside and was rejected, right? There was strong buying pressure down here, and that's why it left a huge wick. The huge wick basically means price was tested to the downside and rejected, which is a bullish sign. And the second bullish aspect of this candle is that there is either a very small wick above or there is no wick. That basically means price was pushing up and there was very little rejection, okay? If we saw a candle like this, what would that mean? Well, it would mean it tested the downside and rejected, and it also tested the upside and was also rejected, meaning there's no real clear bias. It rejected both bullish and bearish, so we don't really know, right? However, if there's no candle, it means there was clearly buying pressure that rejected the price back to the upside, and there's been no selling pressure above. This candle closed at the high of that day, right, which is a very strong sign. Now, in terms of the size of the body, it doesn't overly matter, but like if the wick is small, it means there wasn't a huge price rejection. What we want to see usually is a pretty big wick and a slightly smaller body, but the most important thing is that there's a big wick below and a very small wick or no wick above. But through backtesting and through experience, you will build some intuition on what is actually a strong bull hammer and what is not. But that's the basics. And then for the shooting star, it's the exact opposite. There's no difference. It's leaving a big wick at the top, meaning price tried to move up but was heavily rejected, and there's very little buying pressure to the downside, leaving almost no wick, okay? That is why we use these candles in particular. They are quite powerful on the higher time frames. For the lower time frames, not so much, right? Everything on the higher time frames carries more weight, right? Okay, so there is three main scenarios where we would actually take a buy, right? And once again, you might think this is basic. There's a lot more to it. This is just the, ground zero, right? Scenario one is we have a strong support level and then we see a nice bull hammer tap us into our level and push to the upside, right? That would be a buy. Same for the trend line. We need to see a nice bull hammer here following the trend and we go long. And the third scenario that we take this trade is a break and retest. So we have a resistance here, it's been broken, it now becomes a support, and we get a nice bull hammer printed here. Okay, those are the three different kind of scenarios where we would look to take an entry, and the same goes for sells. All right, we're looking for the same thing, but we're looking for a shooting star to print. Same again, right? Nothing much changes. Now for this strategy, we just aim for a fixed 1 to 2. Now the win rate probably doesn't vary too much if you want to go for like a 1 to 3, or you want to take partials at 50% of the profit. You know, your ore made per month is probably not going to vary that much, but again, you can go and test it out and see what you have found to generate the highest return each month. But for us, we keep it simple. We stick to a 1 to 2. We don't want to go too heavy with trade management, so we're not checking charts all day. You know, we've got other things to do. We have other accounts to manage. We want to keep this swing trading strategy as simple as possible, so we can just trade it on our personal funded accounts, and that's it. Okay. All right, guys, let's run through a little bit of back testing, okay? We're just going to be doing this on one pair, but what you have to understand is we use pretty much all major pairs, so there's not going to be that many setups, you know, even every month with just Euro USD. But for the sake of back testing, I'll fast forward it if we don't get trades for a while. But yeah, like I said, we're just going to start by marking out areas of interest, and we're going to let it play out, okay? Now, we see a bull hammer right here, and we see a level here. However, it wasn't really respected, okay? Price moved up, moved around the zone, didn't have an immediate reaction. So, personally, I wouldn't take that, although it is technically a break and retest. Well, it's more of a bounce off of support, but it's just not very clean, right? I'd prefer if the wick was here and the body was up here, then I might take it, but personally, I would not take that. Boom. All right, this would be a good setup, right? We're at a decent support level here. We had a bull hammer print inside the zone and close above the zone. I would personally take that. So obviously our entry is going to be at the daily close. Stop loss goes at the bottom of the wick with some exceptions, which hopefully we'll find some examples for. And we will aim for a 1 to 2, okay? All right, that's the first win. Now, technically that is also a valid setup. So we saw a tap into this resistance. Again, it's not the cleanest resistance, but that is quite a clean candle. So we're just gonna go for this. So once again, entry is gonna be at the candle close. Stop loss I'm going to have just at these highs, and we're going to aim for a 1 to 2 into our zone here. So let's see. All right, nice. Another win. Let's continue. This candle here, you can see, although it has a bigger wick and a smaller wick down here, the body is huge, right? Usually if the body is bigger than the wick, it's not really showing a huge price rejection from where we opened. So personally, I wouldn't take that, although it may be a great setup. All right, we have another decent setup. Usually I don't get so many, but remember, these are daily candles. So we have a shooting star here. Now that wick is, the problem with this is it's already moved quite a lot. So it's not a perfect setup, but once again, for the sake of data, we want to take more, so then we can analyze what works and what doesn't. But for this case, I am going to shorten the stop loss a little bit. Yeah, I'll leave it just at this zone, and then we're going to aim for a 1 to 2. So yeah, this isn't a perfect setup, but again, you want to collect as much data as possible so you can actually determine whether this is worth taking or not, okay? All right, so that's our first loss out of 3 or 4 trades. Not bad. All right, another bullish candle, but once again, the wick is pretty big up here. That shows a bit of rejection to the upside, and the body is even bigger than the wick, so that's not really valid. It's not the worst setup, but once again, I would like to see a bit of a bigger wick here, and it's not the greatest. It's the cleanest zone. Okay, now pretty big body once again, but personally I would take that setup. So in this case, I'm going to shorten the stop loss a little bit because I don't want to aim for such a high target, right? All right, that's another win. Lovely. Okay, so we've literally bounced off this zone 5 times pretty much. That's not really a convincing bull hammer. I wouldn't take that. Yeah. Alright, I played it too fast, but that is a break and retest. That is a shooting star, but I kind of like the shooting star to close outside of the zone. So I probably wouldn't have taken that, but I missed it on the backtesting anyways. One thing with backtesting, you should realistically be using 1x speed, because it sounds stupid, but a lot of people will cheat in their own backtests, which literally makes no sense. You know, if you're cheating in your own backtesting, it just means that your data isn't useful and you're just completely wasting your time, right? I know it's nice to see that, oh, my strategy has a 70% win rate, but if the data is not accurate, well, then that's just stupid. So ideally, as soon as you see your entry candle, you should not press play to see any candles after. That's self-explanatory, but you know, sometimes you do catch yourself cheating in your own backtesting, which is pretty stupid. All right, we have another kind of a bull hammer at a decent support. It's not perfect. I don't know if it's A+. That's a crazy bearish candle, and I would have liked to see this close a little bit above the previous candle. But once again, for the sake of backtesting, for us to know if we should take a setup like this in future, we should just collect the data, okay? Now, stop loss for this, I'm going to keep it at the wick. I'm going to put it at the bottom of the support. It is quite bearish, so I'm okay with giving it a little bit more space. All right, immediately stop loss. Yeah, like, we're bearish. That was a very bearish candle. So now we know. We can now look to take into account the overall trend or the candles leading up to our entry. But again, this is the data you should be collecting. So once again, with backtesting, if you're on the fence about taking a trade, just take it, put it in the spreadsheet, and then you can actually determine whether you're going to take setups like that in the future or not, okay? Okay, I let the candle after play out by mistake, but that's a much nicer bull hammer. So we're going to leave stops at the wick. 1 to 2. Let's see. We're still bearish, but it's a valid setup. It's worth collecting. All right. retest. All right, I would probably take this. That's a break and retest. That's not the cleanest bull hammer, but now I don't really want to aim for much of a higher TP than this. So in this case, I will shorten this just to get it to a 1 to 2. Let's see what we got. All right, another stop loss hit. Wicks are the same size, body is huge. Not taking that. Can we get a break and retest? Yes. Now this to me looks like a pretty clean setup, but once again, you know, with a 50% win rate, you're still profitable. We are in a downtrend, break and retest. Pretty nice hammer. Let's see what we can get out of this. Not the greatest. Now, with a setup like this, just from my previous experience, if we reach this level, which is a pretty strong support, I will move the stop to break even because there is a chance of it reversing here. And if it gets here, we have a 0 risk trade, okay? So I would move stop to break even here. Not looking good, Brev. Oh, that's unfortunate. So what happened here? Liquidity was taken before we had the push down. Our direction was right, but our entry wasn't perfect. So that's, again, something to note in your back testing. All right, I think we'll leave it at there. I'm not sure what the win rate was for those chunk of trades. I think it was more than 50%, but again, it doesn't really matter what your win rate is until you have like 100 trades back tested, because I may have gotten lucky there, or I may have had a bunch of losers. It doesn't reflect in the strategy until you've got 100 trades back tested. That's when you move to refining and analyzing what you've actually collected. But yeah, I hope that helps with the kind of real-time analysis. Once again, you will build your intuition even from back testing, and that's when it'll start to feel like you're actually making progress and like you have some sort of tangible, not control over the markets, but you're more confident with your setup, and confidence is key. That's what's going to allow you to actually stick to your rules. So yeah, I hope this helped. All right, guys, on a final note, instead of going and watching another 2-3 videos and not actually doing anything, go to the charts, backtest 2 or 3 of these setups, and you can send them to me on Instagram. I'll give you some feedback anywhere you went wrong. There's my Instagram. I'll leave the link in the description. And yeah, hope you found that valuable, and I will see you in the next one.